Hello, everyone. Tim Davis here, coming to you guys with my market review. I won't say weekly because I missed you guys last week. Just been having a heck of a past 2 weeks. Been extremely busy with some family things taken care of, but couldn't stop. I couldn't resist doing one today because of what we're starting to see in the major averages after such a big move up from the lows that we've seen in June. So we're starting to run into some serious resistance, and it's going to be a battle between the bears and the bulls until one takes full control, which I think the bears are probably going to find a way to reject the markets at the level of resistance that is encountering right now. I'm going to start off by taking a look at the tool that tracks the S&P 500 stock trading above that 200-day moving average. And as you see here as well, when we got to a very, very low point, right at a level of support, the sentiment changed, markets took off. But we still have to face the overhead resistance dealing with the moving averages. So here is a 50-day moving average, which is normally a 50-day and a 200-day moving average are normally strong areas of support and strong area of resistance. And as you can see now, even looking at this percentage tool, we are back at the 50-day moving average, folks, which is going to act as a strong, and I mean a strong level of resistance. So this breadth tool right now shows that we have about, move this around just a little bit. So 0.46, almost 0.47% of S&P 500 companies trading above their 200-day moving average. Still means that we have 53% that's trading below the 50-day moving average. So the breadth of the market is still negative, believe it or not, even though you're seeing a strong move up. Still have the majority of stocks trading below their 200-day moving average. Now, right now, if I was to change this to the 50-day tool that shows the percentage of stocks trading above the 50-day moving average, it's going to be in favor of the bulls. That would be in favor of the bulls. But the one I only track is the one that tracks the number of stocks trading above the 200-day moving average, because that is like a major level. So right now, this percentage is hitting right at that 200-day moving average, folks. I mean, yep, right at that 200-day moving average. Right at that 50-day moving average. We're hitting right there at the 50-day moving average, which in turn I think is going to continue to act as a strong level of resistance, and we should start to see, not only should we see this breadth indicator start to move down, but the overall stock market start to move down. If you look below where my wins percentage is, we're already starting to see a curve in the oscillating within the wins percentage. You got the full stochastics that is also in overbought territory. Now let's take a look at the indexes. So moving right to the S&P, and this is a weekly chart, by the way, that we're looking at. So weekly chart of the S&P. I already drew a Fibonacci retracement because I want to point something out here. So here is here's the low point of June. So we hit that low point of June where the markets decided to bounce, and they got a strong bounce. Where to? Only back up to, again, the 50-day moving average again, right back up to that 50-day moving average. As well as, I took the liberty to draw a 50-day, Fibonacci retracement tool from the highs to the lows of June. And if we look, we made it just above the 50% Fibonacci retracement tool, ran into the 200-day moving average just below the 61.8% retracement, and it looks like we're starting to reverse. Oscillators in the wins percentages in overbought territory, as well as oscillators in the full stochastics in overbought territory. So again, the major indexes are hitting resistance on the weekly chart. And I'm actually going to take a look at the S&P E-Minis since it is past 6 p.m. Let's see where we stand On S&P E-Minis, same thing. Look at that. Right up to that level of resistance at the 50-day moving average, and look what's starting to happen. Starting to stall. So something's going to give. Your price action is going to break above this 50-day moving average on a weekly chart, or we're going to reject and move lower. I think we're going to reject and move lower. So we're going to see how that pans out. And if I was to draw a Fibonacci retracement tool, here, we'll also see that price action has retraced about about 60, just above 50%, close to 61.8% of that move off the lows from June. And it looks like we're running into, again, a major resistance right at that 50-day moving average. Let's take a look at Dow Jones E-Minis. Same scenario. Where to? Right back at the 50-day moving average on the weekly chart. Looks like it's starting to turn into a level of resistance. Look at the Fibonacci retracement tool. Again, that's showing a move back up to right at the 61.8% retracement. So it retraced about 61.8% of that move off the lows from June, which is a pretty good substantial move. But it now has to contend with that 50-day moving average, which is going to act as a level of resistance. Look at the Nasdaq E-Minis. Same scenario. Take a look at the oscillators and the wins percentage. It's starting to hinge lower. Oscillators and the full stochastic starting to hinge lower. And we didn't quite make it up to the 50-day moving average on this particular index, which is the S&P. I'm sorry, the Dow Jones. I'm sorry, the Nasdaq E-Minis. Draw this fib tool here, and we'll see that it didn't even make it up. It didn't even make it all the way back up to the 50% retracement before price action is starting to reverse on the Nasdaq. Let's take a look at one more. Russell 2000 E-Minis. Again, running into resistance. A famous theme here, folks, that even though we made it through a major level of resistance on the daily chart, the weekly chart then takes precedence over the daily chart. And now what we're seeing is that on each one of these weekly charts that I've shown, price action has run right back up to that 50-day moving average, and now it's starting to reverse. So it would not surprise me very, very soon to start to see some major moves downward to back away from that 50-day moving average on the weekly chart, with the oscillators and the wins percentage here also starting to turn lower, and the oscillators and the full stochastic starting to decline and turn lower. So that is food for thought, folks. Something to pay close attention to is that we're running into major resistance. So I would not be trying to continue to chase this rally higher, as this bear market rally may be coming to a close. One more thing we'll look at is crude oil. See what crude oil is doing. So crude oil is trying to find some footings. We got to see how that pans out. Right now, crude oil is just looking the opposite of the markets, where markets is running into resistance. Crude oil seems to be running into support on the weekly chart, right at this 50-day moving average. So let's see if that support level holds on crude, and see if it gets that move higher. We take a look at nat gas. Nat gas has been the strong one of the bunch of the commodities. Nat gas has really been starting to outperform. So that's going to be negative on the markets. We got a commodity that's very strong. Nat gas on the weekly chart went down and it hit its 250-day moving average from June of this year down to July. Big sharp move down, and since July it started to creep right back up. Is nat gas about to break above $10? That is a strong possibility. Here's a monthly chart of nat gas. It looks like it wants to break out, folks. So nat gas is looking extremely strong, looking like it wants to be a breakout candidate. Would not surprise me, folks, over the next several months or so, over the next 6 months or so, to see nat gas attempt to climb up to this particular level of resistance right here that is seen back in 2008, right around 13 bucks. So above 13 bucks. I would not be surprised to see nat gas really start to take off here, folks, in the near future. So that's something also to keep in mind, and something to be mindful of, is that as long when these commodities start to take off, we'll start to see it really start to see an effect on the overall markets, which also may in turn see CPI data or inflation numbers go right back up. All right, folks, that is some news that you can use, hopefully. And let's take a look at one more indicator by taking a look at the VIX. So the VIX has been in sort of a funk lately. And I'm going to try to expand this out just a bit. So here's a weekly chart of the VIX. And opposite our markets, this weekly chart of the VIX, a long stretch of red, folks. Anytime, and this is on a weekly chart, anytime there's a long stretch of red like that, the buyers in the market need to beware, because with the VIX having such a long stretch of red, I have not seen a long stretch of red like this in the VIX all year or over the past 2 years at all. Normally, eventually, when you get a long stretch of red, I call it a stale red light, eventually we're going to see a reversal in the VIX on the weekly chart, which is going to be a strong, possible strong reversal. If you look at the full stochastics, it is in oversold territory, deep oversold territory on the weekly chart. Look at the Williams percentage, deep oversold territory on the weekly chart. And if I was to pull up a daily chart of this tool, we'll start to see, even though oscillators are still in oversold territory on a daily chart of this VIX, it's starting to get a little bit of rise, slowly but surely. So the VIX has just been trading between this range, folks. Eventually, I think the VIX is going to find a way to break out of this range. Here's a look at the VIX futures. VIX futures is a precursor to what we can see happen in the VIX cash market. So right now, VIX futures show, let's go look at a daily chart. VIX futures show price action back above a level of resistance and heading up towards this 50-day moving average. And look at the oscillators in the full stochastic, it's starting to point up. RSI got a big bounce on the daily chart off of the oversold territory. So with the VIX futures trying to make a move, that was signal that the overall market probably overnight is probably going to start to see some decline eventually. We're to see how that pans out. All right, folks. Hopefully this is something that you guys can use. Again, looks like we are in overbought territory on the overall indices, meaning that we're running into a strong level of resistance on all the indexes at its 50-day moving average on a weekly chart, which to me was signal that we are possibly heading for lower prices in the overall markets. So now is not a time to try to continue to chase this rally, bear market rally. I think that's what all it was just a bear market rally. It was a strong one, but I think it's starting to run its course and starting to run into some major resistance. So keep that in mind, folks. While you're trading, enjoy the rest of your week, folks. Just be mindful and be careful trading. And again, as well as you can make money on the way up, you can also make money on the way down. So find a way to protect whatever gains you may have made within this bear market rally, and be prepared for a major shift if one starts to happen in the next few days or so. All right, folks, that's all I have for you. Until the next video, Tim Davis is signing off. I'll catch you later. Enjoy the rest of your weekend.